Going to the clouds. Yes. Okay. So we're recording right now. But yes, welcome. Hello. Today is a Wednesday. And maybe you're eating your lunch. Maybe you're on the East Coast snacking away. That's totally fine. All good. Get your notes ready to take notes. Your mind ready to listen and be aware. I am Vanessa Dami, and I am a global business consultant as well as a speaker and author, but I will not be speaking today. My focus is my clients call me the business defibrillator because I help bring life back to them and their business so they can take their business to the next level. And my specialty is helping people grow their purpose-driven business without any burnout, sleep deprivation, or meditation. So that's my specialty. And I'm here and happy to welcome my business colleague, Tanisha, the lofty entrepreneur, who is here to share some beautiful insights on health insurance for entrepreneurs and freelancers. I remember, so I started my business a few years ago while I was doing my day job. So I had my six-figure salary, my insurance, my benefits, all the things. It was great, right? And obviously one of the concerns of leaving that was, what's the deal with insurance? What's the deal with insurance, right? And of course, you get taxed depending on what state you in. They tax you because you don't have insurance, etc. But point being, we're here today to get some insights and help you learn and grow and ensure that you're setting yourself up for success and your family too. If you are caring for family members, that's probably a really important topic as well for you too. And so I will pass it off to Tanisha because she'll do an intro of herself as well. But with that being said, enjoy, everyone.
Hi, everybody. I'm Tanisha Coffey. Nice to be here with you guys today. And I'll tell you a little bit about myself in a moment. I want to just jump in. I want to be respectful of your time. So hopefully you guys have knocked off about 35, 40 minutes of your time today to kind of just listen in and learn. And what I'll do at the end is I'll open it up for questions if you guys have specific questions, and I will do my best to answer. All right, so I'm going to go ahead and share my screen. We're going to jump into the presentation and take it from there. All right, can you guys see my screen just fine?
Yes, we can.
Thumbs up. All right, appreciate it. All right, so today we are talking about health insurance for entrepreneurs, and not just health insurance in general, but we're going to focus on how to buy strategically so you can get the most for your money and you can pay less while you're doing it. All right. So first thing we want to think about when we're going through this is whether you identify yourself as just an entrepreneur, self-employed, a freelancer, a small business owner, because the government does differentiate between those different classes. The point is, however you identify yourself, this session is for you. Okay, please understand that. Whether you're working a 9-to-5, getting ready to transition, whether you're already into entrepreneurship, this applies to you. All right, so first, I want to introduce myself. Hello, I am Tanisha Coffey. I am a business strategist and I'm a licensed insurance agent. I have 15 years experience as an entrepreneur, and I am passionate about helping entrepreneurs to use strategies to maximize their success. Across my brand, you will find that is the common theme, being very strategic with the things that you do. All right, you can catch up with me at Tanisha Coffey on most social media or at The Lofty Entrepreneur. All right, so let's jump in. Now, we all know health insurance is important, but it's really, really important for us business owners, okay? Because as business owners, most of us, many of us are one man, one woman shops, right? So that means if something happens to your health, or if you're not taking care of your health, that puts your entire life in jeopardy. And if you're responsible for others, it definitely can impact them. So it's very critical that you have health insurance. And I know that can kind of be a tense spot for most people because like, we were kind of mentioning before, it can be a hairy situation figuring out how am I going to have health insurance if I don't have a 9-to-5 job providing it for me. What do I do? That's what this session is designed to do, to help you to kind of understand what some of those options are. All right. So if you think about it, what happens to your business if you get sick? Let's kind of walk down that rabbit hole. Okay. If you get sick, your business isn't likely going to make money. That's especially true if you're a one-man, one-woman shop. If you are a small business owner, which the difference is typically you have employees or other people working for you, that means the impact on your business, the daily operations can be impacted. And then of course the revenue that's generated, which means if you're not generating as much revenue, now you're impacting your employees as well, because now you're out of the loop because of your health. So it really can very quickly snowball. And then when you think about your personal income, how is that impacted? Obviously, if you're getting your income from your business, now you're not getting income for yourself. That's going to impact your bills, your business expenses. None of this gets taken care of if you get sick. So there's lots of implications for your business. All right, so this is what could happen. So this picture was taken back in April 2020. Now, at the time that this picture was taken, this was 10 days after I had been sick. Now, I was so sick that I was laid up in bed. I started off fine, day one. But I woke up one morning, I had a little bit of kind of pain in my back. My husband said, why don't you go ahead and lay down and rest? I said, okay, yeah, let me go ahead and do that. I've been ripping and running. Let me just get a little bit more rest. I'll be good. I was wrong. So I woke up that morning feeling fine. By that night, I was running a fever of 104. But mind you, this is 10 days before April 5th. So I am the type person where I'm healthy. I'm generally healthy. I don't need to go to the doctor. The times that I've been to a doctor most of my life were when I was a child and I had ear infections. And then as an adult, when I had my children. Between that, I really have never in my life needed to go to the doctor for too much of anything. So, while health insurance was something I knew about, it wasn't critically important to me. Now, fortunately, at this point in time, my husband had taken a position and he had health insurance, but we didn't have it yet. And so when I first got sick, it was just, kind of a normal par for course. I was just going to wait it out, tough it out. That's what I had been used to doing with the very few times I did get sick, and everything had always been fine. It was not fine this time. So the day one, I woke up, I had that pain. I laid back down. By that night, I had the fever. A couple days in, I couldn't eat anything. I couldn't keep anything down. I couldn't drink. Everything I put in my body was coming back up. So I said, okay, well, I don't have health insurance. I don't have a doctor to go to because I don't really see doctors. I hadn't really needed it before. And I didn't have health insurance. So I was like, I'm not really trying to go pay all this money, when it's probably I just need to rest up, take some medicine, pop some over the counters, and I'll be good. Didn't work out that way. And so what ended up happening was I got to the point where I said, okay, maybe I need to call and get some telemed. I did that because part of the reason, now normally I would have walked into like a minute clinic at CVS or something like that, because again, I don't really need doctors that much. But if you back time this was literally when everything was starting to pop off with the COVID-19 pandemic. So on March 18th was when businesses started shutting down. They started sending employees home, and that's when the government was saying, we're gonna put the country in basically a shutdown until this blows over. So I was, definitely not trying to go out. I'm a mother. I wasn't trying to bring anything back to my children. And I was in tough it out mode. Eventually it got to the point where I couldn't get out of bed. My husband was trying to take care of our 3 children. He's juggling everything. He's trying to take care of me. I called the telemed and I speak with the doctor and they're telling me, oh, you need to come in for a COVID test. I wasn't exhibiting any of the COVID symptoms. I was sick, but I knew I wasn't exhibiting any of the symptoms. But they wanted me to come in for a test to then wait, to then be able to figure out if they were going to treat me. I wasn't willing to take that risk. Again, didn't have health insurance yet. April 1st, my husband's health insurance kicked in. And I still didn't want to use it because, really, I didn't know what all it included. I was like, most Americans, most people who have health insurance through their jobs, they don't know exactly what all they have. They don't know all of their limits. They don't know what's going to cost them when, what, how, where. And for me, again, not needing to see doctors, it just wasn't something I wanted to do. And then also with us going into the pandemic, my husband, within that time span, got laid off. So he had the health insurance, but he got laid off. So I wasn't trying to have some big expenses. So I tried to tough it out. Well, I ended up calling and getting some medication from a doctor over the phone. They diagnosed me, supposed to make me feel better. It went the other way. My fever spiked. I was at like 104.5, something like that at its peak. You may not be able to tell it in this picture, but I was red. My body was red from head to toe. And what had happened was, on top of the illness that I was having, excuse me, which again was not COVID, on top of that, I had an allergic reaction to the medicine that I was given. So, things were kind of just getting worse and worse and worse. Finally, Sunday, April 5th, around noon, my husband said, I need to take you to the ER. I was terrified because at the time COVID was going on. And so I didn't know what was going to happen. They weren't letting other people go. I didn't know if I was going to be able to, I didn't know what was going on with me. I didn't know how I was going to be able to really communicate with my husband. How was he going to get to me if something went down and I needed some help? Because he wasn't going to be able to be there with me. Nobody could be there with me because we were in COVID times, and we're still in COVID times right now. So long story short, went to the ER. They admitted me. I'm sorry. They took me in. They assessed me. Excuse me. The doctor said that I had kidney stones. And that was I had kidney stones, and he told me that I had an allergic reaction to the medicine. So they began to treat me. But because of how weak I was at that point in time, they said, let's go ahead and admit you to the hospital. You'll just be there for tonight. So I was at the ER for about 5 hours before they then transported me by ambulance. And they were supposed to be putting me in like a regular unit, but the hospitals were crazy because COVID was going on. The doctor had completely ruled out COVID for me. However, at the ER, what was supposed to be a one night in the hospital ended up being 5 days. And I got to tell you, it wasn't because I got more sick when I was there. It was because of the hospital's procedures and COVID and things like that. So I got lost in that mix. But I say that to say that was unexpected for me. It was already going to be an expense that I was expecting that the insurance that I had would cover, but it didn't. And then it ended up being a longer time than even expected. So my cost obviously multiplied and multiplied. And I kid you not, when I tell you, when those bills started coming and the total tally was $152,000 and I had insurance, I was just beyond flabbergasted. And so at that point in time, I kind of lost faith in health insurance because I'm like, well, what's the point if I'm going to be hit with this bill that's impossible to pay? But that was kind of the emotions of the situation, because in the end, insurance did help. What was wrong was I did not have the right information. I did not have the right coverages. I didn't know what I had. I didn't know what the possibilities were. So I didn't know that this situation could have been very different had I known what I know now. So let's dive into more about what I know now and what I want you guys to take away. All right. So some of the health insurance basics is there's two types of health insurance, okay? When health insurance categories. You have the private market insurance, and then you have the government subsidized insurance. So private market is you going to Blue Cross Blue Shield, Aetna, Cigna, directly to their website, buying insurance and moving on about your life if you're doing it on your own. Or similar to what those of you who have those types of providers through your job, that's pretty much what your employer did. They went directly to the company, or they could have worked with an insurance broker, set up a plan, and now you have direct access. In those situations, there's no assistance for you paying that, except for, of course, if you're working with the employer, the assistance comes in the form of them paying a portion of your insurance. With government subsidized insurance, there's three types. There's Medicaid, there's the Affordable Care Act, and there's Medicare. All right, so today we're going to focus on the Affordable Care Act because Medicaid is more so for people who do not have any ability or very little ability to pay, and Medicare is for people 65 plus. So we're not going to touch on those today. We're going to focus on Affordable Care Act. All right, so when it comes to the two types I was talking about, private insurance, which is also called non-ACA. So the pro of going that route, that's one of your options, is that in some cases, it can be cheaper than ACA. So don't completely rule it out. However, you don't want to put it first on your list, and you'll learn more why. All right, now the con of private is that typically pre-existing conditions are not covered. So if you're in your childbearing years and you become and you're pregnant, that wouldn't be covered. That's a pre-existing condition. If you're being treated for cancer or heart issues or any of those, you may not be covered for those because they're pre-existing. So we'll talk about some strategies down the line. When it comes to ACA, the pros are that it does cover pre-existing conditions. It's full major medical insurance. Another pro is the possibility of getting those reduced premiums and copays, those subsidies through the government. So keep that in mind. Those are big. Now, the cons with that is that with ACA, if you have a doctor that you love, you might have to break that relationship with that doctor if your plan doesn't happen to include, if your doctor doesn't happen to take the plan that you end up choosing. And the thing about ACA is because it is subsidized by the government, typically, you are restricted to your county for the doctors, that you can go to, in the sense that the base price that you pay, that you see when you sign up, you're restricted to that. If you go outside of your county, outside of your state, you still are covered. You just are going to pay a higher price for those services, with the exception of like urgent care or ER. Okay, but if you were just, feeling sick, if you just said, I need to go to the eye doctor, all of those things would cost you more if you're on an ACA plan versus if you're on a private plan. Wherever you go, it's the same. All right, so let's talk about some myths. So one myth about ACA is that it's only for low income earners. The fact is, Medicaid is the government insurance that's for low income earners. The fact is that there's a huge range that people can qualify for ACA when it comes to income, which brings me to the second myth. The second myth I often hear from people is that I make too much money to qualify for ACA. And that's not true either. It is possible to make too much money. However, in the recent years since COVID has happened, the thresholds for what that income level has increased. And I'm going to just hint to you, even before they increased, people with six figures could actually get subsidies. Okay, so for some of you, hopefully that's ringing in your ears saying, oh, really? Okay. So another myth that people have is that the services that you'll get, the providers that you'll be have access to are going to be subpar if you use ACA versus using private market insurance. That is absolutely incorrect. The exact same companies that provide private market insurance also typically have plans that are on the ACA marketplace, which means you have equal access to the same quality care. You just have to choose where you want to go. Okay. All right. So the biggest benefit of using ACA is that you have the possibility of getting a premium tax credit. So that tax credit is the subsidy that I've been talking about. And basically that subsidy is what reduces the cost of your health premiums. So for instance, if you were quoted that a premium, if originally, say you went to just a regular marketplace, you didn't try to qualify for ACA and you see a premium cost $1,000, depending on some factors, which we'll talk about in a moment, with the ACA, that might get reduced. That's the benefit, that's savings. You're an entrepreneur or going to be an entrepreneur, you need to watch every single dollar, save where you can. If you save $100, you save $1,200 in a year, $200, $2,400, $300, $3,600. And yes, those are real possibilities. There are people that I know who are business owners who are paying $5 for their insurance. Think about that. All right, the other way you can save through ACA is through a copay reduction. So typically with insurance, you have a premium, which is the amount that you pay each month for your healthcare. And then some insurance plans will have a copay, an amount that you have to pay when you actually go to visit the doctor or you actually get a prescription. However, depending on the plan that you choose, that amount can sometimes be reduced, but you have to choose strategically. We'll talk about that coming up. All right, so I want to talk about eligibility. So I told you before about income, and I was mentioning about that span. So the span really varies. Your eligibility is based on your income, your household size, as well as your zip code. So when it comes to income, if you earn too little money, you won't qualify for ACA. You're more likely to qualify for Medigap or Medicaid. Either way, you still can get health insurance coverage, which is the whole point of what we're talking about today, right? But you won't know unless you try, unless you see what you qualify for. When it comes to the actual income, how much is based on your adjusted gross income. Now, for people who are working, in a 9-to-5 job, of course, that's very clear because you have a certain salary, you have a certain amount that it boils down to, at the end of each year. When you're an entrepreneur, there's more flexibility. Now, remember, when you're requesting health insurance, like in open enrollment times, you're requesting it for the upcoming year. So it's not about where you are, it's about where you think you will be. So for people who are in right now thinking about the upcoming year, you think about how much money as an entrepreneur, if you're an entrepreneur or planning on being one in 2022, how much do you think you'll be making? If you think you'll be making $15,000 because you're just starting off, then that would be the amount that you would put for your adjusted gross income. If you are already in business and you've had a great year this year, but you're not so sure about next year, you might say if this year is $250,000, but you're not sure because this year was unique because of everything going on with COVID and your norm before that was $140,000, you would put $140,000. Guess what? In both of those scenarios, it is possible to get ACA subsidy. Now, part of what plays into that ability, as I just mentioned, is your household size. So your household size includes whoever the taxpayer is, your spouse and dependents. Okay, you have to include everyone in the house in that number. Your zip code matters because depending on where you live, the cost of living comes into play, the amount of subsidies that particular county has, the levels that are set there, all of those play into it. But I want to give you an example. So my partner, he has a client who earns $140,000. Now the client is 60 years old and lives in one of the areas of Miami. Making $140,000, that client and his wife were able to get a $340 subsidy on their health insurance. So between the two of them, they saved about $600 and nearly $670 a month on their health insurance. Do the math. That's, close to $7,000. Is it worth to check your eligibility? I think so. If you have a household, if you're earning, say, the 15,000 and you have this, you're single and 15,000, you might still qualify. I can't tell you specifically. You have to work with an insurance broker or go to the marketplace yourself in order to figure it out. Now, I will say that your age also does play into it. So, for instance, if that gentleman that I just mentioned who was making 140, if he was 30 years old instead of 60 years old, the subsidy would not likely be the same, even though he was living in the exact same place. Why is that? Because typically your age with health insurance, as your age goes up, so do the costs. So what happens with ACA tries to level things out. So that same person, so that 30-year-old, even living in the exact same location, they wouldn't get the subsidy. But by the time the subsidy is applied to the older person's insurance, and then you have the younger person, they're paying the same. It helps to equalize. It helps to bring down costs and equalize. Okay, so typically enrollment for ACA and really all sorts of insurance happens from November 1st through December 15th. And that's typically if you want your coverage to begin on January 1st. If you, don't quite fit into that window, some states will have an additional period of time that you can still apply. You really do have to check your states. And that can range from anywhere between 15 and 30 days typically. And in those situations, coverage starts February 1st. Now, for some of you, I know what you're thinking. If you're already working in a job right now, and you have, health insurance, but you're thinking about, being part of the Great Resignation, resigning, whatever it is you have in mind, you're thinking about, well, how would I take advantage of this? Well, all health insurance has special enrollment periods. It's the exact same as when you first started your job and you had to wait a certain amount of time before you could get access to those benefits. It just works on the tail end. So health insurance has what are called special enrollment periods. And typically those special enrollment periods, there are certain things, certain situations that trigger it. And you have 60 days in order to go ahead and get onto a new health insurance plan through the market, whether it's private insurance, whether it's ACA. So typically some of those special enrollment periods, things that will trigger them are changes in your household, like having a baby, if someone dies, getting married, divorce, things that will change your household size. If you move from one county to the other and you have, like the ACA plan or private plan, that could also impact it. And then, of course, if you have your loss of health insurance coverage because either, you've resigned, you've been fired, something's happened with the health insurance coverage that you were previously provided through a spouse, whatever the case may be, if you lose health insurance, these are all things that create that special enrollment period. So it doesn't have to be the end of the year when you can tap into these. So if you're thinking about starting a business and you haven't, and that's in the projection, just know that down the line, you'll still be able to apply these strategies. All right, so let's go ahead and jump into these strategies on how you can make your money really work for you with health insurance. All right, so strategy number one is you want to go ahead and actually check your eligibility for ACA. It's worst case scenario, you don't get a subsidy, you don't qualify for a subsidy, but that you won't know until you do. And that typically doesn't happen. If you need full coverage, with no questions asked, because maybe you have like pre-existing health conditions, you do want to stick with the ACA plans, even if you don't get a subsidy, because they are full coverage. Remember, I said they accept pre-existing conditions. In that typically you may be paying more than if you were buying a private plan. However, remember, those private plans don't cover those pre-existing conditions. Now, conversely, if you don't qualify and you're in good health, then go for a private insurance plan. It'll be more cost effective. And then in either scenario, you want to couple it with some of these other strategies. All right, so when you're choosing those plans, when you're looking through those plans, you want what's called a metal plan. So typically they're, may have like a silver plan, a bronze, those type. You want to make sure that you choose one. You don't want to choose a plan that is like just the basic, because the subsidies are only offered on those metal plans. So you take yourself out of the running for that if you just go for the most basic of plans. All right, and then specifically, I just mentioned about silver. The thing about the silver is that the silver plans open you up to those copay reductions. So if you choose like a bronze plan, that copay reduction won't even be an option. If you choose a silver or above, it will be an option, but you won't know if you actually will have a reduction in your copay until after you've applied for the insurance. So you don't want to make your decision based off of, whether or not you're going to get a reduction. You want to, make it based off of, is it covering what you need? And is it at a price that is affordable to you once that subsidy is applied? All right, another strategy is to choose a plan that has a high deductible. And I know that's super counterintuitive for most people, right? But generally, a higher deductible plan is going to have a lower premium, which means that you have a smaller amount of money to pay each month. As an entrepreneur, every dollar counts. So if you're healthy and you don't visit the doctor, this definitely should be the way that you go, because you're not really going to use it. This is more of in case something happens, if there's an emergency, you have the ability, to have the health insurance you need, but you don't need to be paying hundreds and hundreds and hundreds of dollars a month for a plan that has a low deductible, just in case something happens when, in general, you're good and healthy. All right, now just keep in mind, that's not the right strategy for everybody. So like if you already have medical issues and you're kind of seeing a doctor, even if it's, a couple of times a year for that particular issue, this may not be the ideal strategy. It's best to kind of talk with an insurance broker to find out, because you may be borderline, or they may say, no, that's not the ideal for you when you're talking about being strategic and buying. All right, another strategy is to use add-ons. So a lot of people do not realize that there are lots of different insurance plans. So sometimes the plans that you have, like the plan that we had, are not the best for all situations. And so you really need to pay attention to what you have if you're going to just choose one option. If your budget only allows for you to have one option, it's really very important to really try to get that full major medical coverage. However, if you have a little bit more wiggle room in your budget, it's a really great idea. And particularly if you're going to use the high deductible option, to plan for a little space in your budget for add-ons, right? So there are like indemnity plans and riders that you can add on that can cover. So for instance, if I had a hospital indemnity plan in place, which might have cost $32 to give me higher limits for insurance coverages, which means that my overall bills and things like that would have been drastically lower, then my bill at the end could have been completely different. There are riders that you can add on that cover a certain amount of dollars per day at the hospital. It can cover your ambulance visits. It can cover medications. There are plans that will give you lump sum money if there's an accident. So you pay, a small amount of money, but if something happens, you get a huge amount of money. And one of the strategies sometimes people will do is they'll use some of these add-ons in order to cover the deductible. So it's possible, say you had an $8,700 deductible, it's possible to use one of these plans, pay, 30, 60, depends on the plan, depends on the add-ons, maybe an additional $100 a month, but then you get access to these, larger amounts of money that literally can cover the entire deductible if it's strategically created in the right way for you, if it's strategically structured when you buy it. Okay, so really think about that. Now, for those of you who are getting ready to leave a job, you're going to be offered COBRA. Don't do COBRA. Okay. And I'll say this. The only reason you would want to do COBRA is if you absolutely could afford it, and if you know you have a procedure or something coming up, treatments coming up that you cannot wait on, you do not want to pause, you don't want to have any issues with. That's the only reason to stick with COBRA, because it is so expensive. COBRA typically is going to be 2 to 3 times what you were paying when you were with your employer. So if they were taking $400 out of your check, $200 a week, a total of $400 a month, now your COBRA for you is going to be $1,200. Going into entrepreneurship, that's something most people cannot afford. So that's why I say it's better to opt for an ACA plan, at least have something in place. And remember, when you're transitioning, you may not find the perfect solution, but having something in place is going to be better than nothing. Because if something happens, you're already in transition financially, all sorts of things with your life. You don't want to be stuck with nothing. All right, so another strategy, if you are an entrepreneur and you are say you're like in my situation, my husband was working, I was doing entrepreneurship. So in an ideal situation, you don't want to necessarily use your spouse's plan. It's not to say that you can't. It's to say that you should do your due diligence and to check it out. There are some scenarios where you may not qualify for ACA because your spouse is working, and because the plan that they offer is what's called reasonably affordable. However, there are some cases where the cost of the insurance would not be reasonably affordable by the time you add on yourself or if you have your dependents. In those cases, even though your spouse has access to health insurance, it would be more cost effective for you and possibly your dependents to go on an ACA plan so you can get those subsidies instead of paying the higher cost with your spouse. Typically what happens, your spouse's coverage will be fairly inexpensive, but then as soon as you start adding on more people, it gets more expensive. Not just more expensive because you're adding on people, but literally the cost per person is greater after the actual employed person. So keep that in mind. All right, another strategy is when you're applying for these different types of insurances, that you really do want to think about what you are purchasing. Typically, health insurance, it renews every year, but there are opportunities to choose plans and choose a 24-month plan. They typically don't go longer than 24 months, but if you do that, then you don't have to worry about going through the underwriting process and being at risk for the insurance company saying, no, something happened with you last year, you're more of a risk, you have to pay more, or no, we won't accept you in our plan now because of whatever may have happened. So, another great strategy is, especially right now with the increases in limits and things like that, and the amounts of subsidies that are being given, it's a good idea to lock in a 24-month health insurance plan so that at least gives you 2 years at the current rate that you're in order to so you know what you're paying and be covered. You don't have to worry about price spikes. All right, so this picture right here, the $150K hospital bill could have been avoided if I had known all of those things, and if I had worked with a broker. The reason I know all of these things now is because I've partnered with brokers. I have my insurance license. I've educated myself. That's the only reason I know all of this and I know these strategies at this point in time. The average person is not going to know this. If you guys hadn't come today, I guarantee 90% of what I'm telling you, you probably would have never known to ask about, never even thought of. And so, yes, you can absolutely go to the marketplace on your own and, start trying to put some of these strategies in place. But I'm giving you the tip of the iceberg. So if I had worked with a broker, I would have had access to more carriers, which meant that like the hospital they took me to, it would have been a higher chance that they would have accepted my insurance. That was part of the problem. I just remember I was sick. I just went to the ER. I didn't care where I was going. I didn't care what. I didn't even think about a hospital not accepting my plan. I just needed help. So they, brokers have access to more carriers versus agents typically are with, one particular company. They know the industry left and right. So they know all the ways to really make things work for you strategically. And the thing about working with the broker is it doesn't cost you anything. But I didn't know any of that back then. You know now. All right, guys. So I want to go ahead and just open it up for questions. If you have any questions for me, and I'll try my best to answer those.
There's someone in the chat. Anthony asked, well, first off, round of applause, great presentation. Thank you, Tanisha, for the lovely insights and information. I definitely learned a lot myself too. I'm sure people who are here also learn. Anthony wrote in the chat. And so for those who maybe you're typing your questions, feel free to type it in the chat, or you can raise your hand or unmute yourself and access here. So Anthony asks, is Oscar Healthcare a good insurance?
So I would have to look at Oscars, and it would depends on your situation. So I would be very hesitant of anybody who tells you across the board, XYZ insurance company is trash, okay? Because it depends on your situation. It depends on your needs at the time. Certain insurance plans cover certain things for certain reasons. So again, if you're buying strategically and with a specific intention, knowing what you're covering and going into, that could work for you. However, if you're tossing around that particular company, I would encourage you to speak with a broker to see what else based on your situation, because I don't know anything about you. I don't know your income. I don't know your family. I don't know where you live. It's hard for me. I don't know your medical history. So it's very hard for me to be able to say whether that would be good for you. Any other questions?
You are, feel free to share if you have any questions related to your specific situation, or if you would like Tanisha to repeat again what she said, because maybe you're like, wait, clarify again one more time. By all means, unmute yourself and you have time to share now. And yes, first of all, so happy able to bring this presentation here. And definitely, when is the enrollment close? In about 7 days or so. So
yeah. So
yep.
So I want you guys to kind of walk away with this before we close out. So right now is when you need to make a decision, right? Because if you are listening to this right now and you are a current entrepreneur, your time is ticking, right? Regular open enrollment is ending. Depending on your state, you may not have an extension of time. So you want to think about that. And you have 3 options right now. So first is you can connect with a health insurance broker. And I'm happy to help you to connect with someone who's doing health right now. Okay, one of my partners. If you want to do that, be sure to DM me health insurance and I will connect you with someone who can help you. Your second option is you can do it yourself. There are lots of different places you can go to kind of find health insurance. However, there's only a few that are sanctioned by the government and are streamlined with the government. So if you're interested in doing it yourself, you don't want to speak with a broker, that's perfectly fine. Just DM me best DIY health link. Okay. And then your third option is to do nothing else until you do one of the above. So you guys really don't have a choice. I need for you to get covered. You guys don't understand just how important it really is. And it only has to, cost, you can control the budget. If you work with a broker, you can tell them how much you're willing to spend. They will find you something that works for you. If you go to the marketplace on your own, you're going to have more of a challenge because you're going to be working solely on your knowledge versus leveraging theirs. All right, so just please keep that in mind. Okay, it says, Anthony, you talked to somebody. Okay, I was in a car accident and have pre-existing condition, going to chiropractor and other doctors. Okay, so so for you, I would suggest, depending on who you talk to in Florida, it is possible. I would still suggest that you try to qualify for ACA right now. All right. Now, where's your home? You would get the insurance based on wherever your main home address is. If it's Florida, someone in Florida. If it's Jersey, in Jersey. However, that person should, if they are helping you strategically and not just, basically just signing you up for something, they should be able to do one of those add-ons that will allow you to be covered in both places and control some of your costs. You're not going to be able to do that just directly from the marketplace. You're not going to know what to choose there. So I definitely recommend that you kind of ask your broker about that. And again, if you need assistance, just DM me and I'll help you as well. Any other questions? All right, guys. Well, thank you so much for having me. Thank you, Vanessa. I so appreciate you. And, it's a few days until open enrollment ends. But remember, as a business owner, if you're going into entrepreneurship, that transition creates a special enrollment period. So if you're watching this at a later time, this is still an option. Things I've talked about today are still options. Go ahead.
Hey, Tanisha.
Yes.
This is Corey Northington.
Hi.
I just want to say you did an amazing presentation. Are you going to do a future one?
Quite possibly. Reach out to me if you have a certain scenario you'd like me to do one. That would be great. I'm going to see about getting this recording from Vanessa, so that might also be an option. And then I have my my group, which I may do this inside of my group as well, starting a business with Tanisha Coffey over on Facebook. So
sound like a plan to me.
All right. Thank you.
Yes, I'll definitely get the recording over to you. And thank you everyone for joining. Have a beautiful day. Chat soon.